For startups, committing to security and compliance is vital to growth, and that's exactly where Drata comes in. Drata is the fastest way to achieve and maintain continuous SOC 2, ISO 27001, and HIPAA compliance. Drata customers report saving up to 85% of their time, as much as 500 hours when using the product compared to doing SOC 2 manually. Learn why Drata is trusted by brands such as Clearco, Full Story, Smart Recruiters, and more. And you can get 10% off at www.drata.com/TechCrunch. Hi, and welcome to another episode of TechCrunch Live. I'm your host for today, Jordan Crook. TechCrunch Live is all about helping founders build better venture-backed businesses. We do this by connecting you with founders and the investors who finance them. We're going to talk about how they met, why they chose each other, and even get a walk through an early pitch deck. About halfway through the episode, we'll switch over to the TechCrunch Live pitch off, where you, people in the audience, can actually raise your hand and come up on our virtual stage and pitch your startup to our amazing guests. Which brings me to said guests. Today, we're joined by Preeti Choksi, who's partner at Norwest Venture Partners. Prior to becoming a VC, she held operational roles in biz dev and M&A for companies like Facebook and Google. Her portfolio includes Bright, Lumosity, Sitcon, Upside Foods, and Birdies. Preeti, thank you so much for being here with us today.
My pleasure. Thanks for having me.
We're also joined by Bianca Gates, who is co-founder and CEO of Birdies. Before Birdies, Bianca was a sales executive at Facebook/Instagram, and that gave her tremendous insights into the new world of retail. Birdies has raised more than 10 million since inception, including an 8 million Series A led by Preeti and Norwest. Bianca, thank you so much for being here.
Thank you so much for having me. I'm thrilled to be here.
Cool. Okay, so let's jump into it. I thought we could start with Bianca, and you could tell us a little bit about how you and Preeti found yourselves in the same room and ultimately, on the same cap table.
Well, great question. I think before we get into how we met, actually, I wanted to take a step back and talk a little bit about how, Birdies started. My co-founder and I both lived in New York City back in the early 2000s when Sex and the City was the hottest show on the planet. And you would never be caught dead walking outside of your apartment without wearing some beautiful stiletto heels or boots. But naturally, when you would come home, you would kick off your shoes. They were dirty. They were uncomfortable. You wanted to be respectful of the people living above you, beneath you, and everywhere in between. And every time we would entertain friends and family, we were doing so in, socks, barefoot, or in pajama slippers. And so the idea of trying to find a social slipper, if you will, or something for the entertaining space of the home, that like Mr. Rogers moment, when you come home, you kick off your outdoor shoes and you put on your loafers for the home, started back then. I honestly was hoping that somebody else would solve the problem. I had a great career in advertising sales. Most recently, I was at Facebook and Instagram, loved the company, loved what I was doing, but nobody was solving this social slipper problem. And so about 6 years ago, my husband just said, "You've been talking about this problem forever. Obviously, nobody's solving it. Why don't you go ahead and solve it yourself?" And I thought, how crazy. I've never been in retail or in shoe design or manufacturing or supply chain. But he planted that seed. And I remember that night putting my kids to bed and getting online and just trying to teach myself how the heck to make a shoe. And the journey sort of started from there. And my co-founder and I decided, we're going to solve the problem. We'll figure it out. Where there's a will, there's a way. And I knew a little bit about scaling retail businesses on social media, as you pointed out. And my co-founder is amazing. And she was leading a strategy at Ross Dress for Less. And so what we didn't know was how to create the product. And so if we could figure out how to manufacture and design the product, we knew we were onto something pretty big. And so in December of 2015, we launched while I was still at Facebook. In fact, we had no money to spend on advertising or marketing. We each invested $50,000 into starting a footwear business manufactured overseas, which is not a lot of money to start a shoe company. So naturally it left us with no money left to advertise or market our product. So we just posted on our personal Facebook pages that we were launching this business. And it was right around this time, 6 years ago. So it was like that aha moment where people were looking down at their feet and thinking, what am I wearing for Thanksgiving dinner? I've got a great sweater. I've got some jeans on. I can't be wearing frumpy pajama slippers. And so the business sort of took off organically and naturally. And I kept at it while at Facebook, having my full-time job. And serendipitously, Preeti was also at Facebook at the time. And we had met, from time to time there. And so the relationship sort of began well before we started to fundraise years later.
Awesome. So then, Preeti, tell me from your perspective, you obviously have known Bianca, worked with her, saw kind of Birdies plus Facebook when she was doing both at once. Then you became a VC. Talk to me a little bit about that first interaction in terms of, hey, we need some money.
Yeah. It was quite fascinating. Bianca, while she was at Facebook, started Sheryl Sandberg's first Lean-In Circle. And my story was in the book. And we met at Sheryl's house for the first time. And I remember thinking, wow, this woman's a force of nature. Like, I need to figure out how to have her in my universe at some point in time. And we didn't actually work together at Facebook. But I did buy my first pair of Birdies while she was still at the company. I think she hand delivered them to me, Bianca, if I remember correctly, after I bought them.
I was saving money on shipping costs.
And so we got together, and when I transitioned to venture, I already loved the product, but I loved the product as an indoor entertaining slipper, which is how they were originally designed to be worn. And then the bit flipped, in that we found that 75% of women that were buying Birdies were actually wearing them everywhere, because not only were they very versatile, but they were gorgeous. And this combination of versatility and fashion really is what drew me in, because now Birdies was no longer an indoor shoe company. It had fallen backwards effectively into the larger footwear market and had a very particular voice and niche that they were going after. So, that progressed into Bianca and I. Bianca's office, by the way, the original office in the store is literally 3 blocks from my home, which also meant that I was walking by constantly in the neighborhood. And I remember taking a couple people from my firm to go visit the office and visit Bianca and Marissa, her co-founder. And we're like, let's do this. It was probably the most easy decision on multiple levels as well. And we can get into why.
Yeah, I would love to go through the pitch deck, but before we do, just one more question, Preeti, which is like, had the shoe been an indoor social slipper, maybe I don't entertain at my home enough to feel like this is the problem that it is. Maybe they're, but had you not found that there would be 75% of people were wearing them outside of the home, would it still have been that easy decision? Or was that really like the switch that flipped for you?
That was the switch that flipped for me, because, I think if it was going after a niche market, the TAM wouldn't have been big enough, frankly, to warrant a venture funded business, right? And the fact that it was, and it fell into that larger category, made it a lot more interesting.
Yeah. Okay, so let's jump into the deck. Bianca, why don't you drive for us to begin with and tell me what we're looking at? This is the Series A deck, or is this a seed deck?
That's the Series A deck, and it brings back so many great fond memories. We've actually since evolved our logo last summer. So if you actually go back a slide, that's the old logo that was reminiscent of a bird cage of the home. There's like a crown, she's the queen of her castle. And I think we paid like $1,000 to make that logo. I mean, we've always been very scrappy. We were just kind of like, done is better than perfect. Let's move on. Here's the logo. And then the wallpaper, we were so much about interior design and the home. And so we had somebody actually design a wallpaper that we could use for the packaging, our website, et cetera, that we owned. And so again, we've evolved from there, but it's so fun to see so much of where we started on the first slide here.
Okay, and then let's jump to the next one. There we go.
So, I think simply, I talk a lot about like fundraising, a little bit like dating, you got to kind of like, get to know each other, no pressure, introduce yourself. So I think slide one is just who am I investing in? Who is this person? Like, why are they getting started? And I think if you can condense it down into like a short snippet, like we did here, very simply connecting with your audience. I mean, this is a story of two girlfriends who shared the same problem of not having footwear to wear while entertaining friends and family at home. And so the journey began. Very simple.
Can I ask you, Preeti, how important is there's a last line on this that says, they came from Facebook, Instagram, Bain, right? Like that little bit of resume. There's obviously a lot of like personal character baked into this, but then there's some data right there at the bottom. How important do you think that is, generally speaking, not necessarily with this deck, but when you're looking at an about me slide?
Yeah, it's hugely important, right? Like, I want to know as an investor, why are you uniquely capable of solving this problem, right? And to put more color on this bio, Bianca's read on this is about a story about two girlfriends getting together and following their passions. My read on this is a perfect yin and yang match. And let me tell you more about that, right? Which is, Bianca was advising retail customers like the Gap and Nordstrom on how to use the most important marketing channels, Facebook and Instagram, to sell their products. And when you understand that and you understand the key levers behind it, you have a huge advantage in the world of customer acquisition costs that we're living in, that's always up and to the right, especially now. Then you bring Marissa onto the stage, and Marissa came from Bain, where she was actually advising retail customers. She worked at Ross and actually came up with a plan to generate $5 billion in net new revenue for them. And to me, that was the magic, right? You have someone who is actually a retail and ops expert, and you have someone who's a marketing expert, and then they're going out to solve the problem. The other thing I'll add is just in terms of grit, right? I mean, I know Bianca put her home up for collateral to open the Union Street store and office. And to me, that just showed huge commitment from both founders to lean in and get this done. And in a world in which they knew nothing about footwear or design in particular, they just didn't take no for an answer. Like, they talked to manufacturers in China that had no business working with us because we were a teeny tiny company. They just basically broke down walls to get stuff done. So there's so much more behind this picture that I think was relevant in our decision making. But specifically, that yin and yang of Marissa and Bianca is what really is the magic here. Still is today.
Yeah. Can we talk a little bit about that balance? Because that's an interesting note that she put her house up for collateral to open a business. And on the one hand, you're like, wow, that's conviction. And like, she's probably not going to fail, right? Because she's got a lot on the line. So I can kind of trust her commitment and her conviction in what she's doing. And then on the other hand, there's like, are you a cautious person? Are you pragmatic? Do you make sound choices? And what is the balance when you're looking at a founder and you say, okay, well, I need you to take risks. I need you to kind of be convicted beyond maybe reason, but then at the same time, I need you to be a really reasonable person. Is that hard to find? Because it seems like a small kind of overlap in the Venn diagram of the sweet spot of where you'd want to be for that. Am I mistaken in that?
Yeah, I mean, look, I say this often in the most sort of fond way, which is, I think to be a founder, you have to be a little bit of crazy, right? I mean, you have to be, and in Bianca's case, maybe a lot of crazy, but it's like a good crazy, right? Where you have to be so convinced about your product, but, still grounded in reality, right? And to me, what sort of the, collateral piece and other, putting 50K each into the business showed is they weren't thinking about this as a venture scale business to get started, right? They thought like, hey, we have this problem, we're going to solve it. And it wasn't, again, going back to the point that they fell into this larger TAM, that they're like, okay, we're open to venture financing. Like and I'd actually love to hear Bianca's perspective on this, because that's the decision-making that went in and that I saw with that sort of scrappiness is like, they weren't thinking we're going to take other people's money to build this. They were like, hey, let's just build this and figure it out.
Right.
And we had very limited resources. To your point, this was never meant to be a VC-backed business. I mean, I was full-time at Facebook. This was just, a problem we wanted to solve and kind of see what would happen. And one of the philosophies at Facebook that I still use today at Birdies, which is Done is better than perfect. And just launch, just execute, just see what the market wants. I mean, if we would have spent so much money on perfecting this like indoor slipper, turns out that wasn't, the real value of this business. But we were, we had a decent enough product and an interesting story that captured people's attention. And as we started to grow organically on our own, we were able to reinvest that money and perfect the product along the way, and ultimately figure out that our customers actually didn't want us for the problem we were trying to solve. But the reality was there was a bigger problem out there that we just not had identified because, we were really focused on solving a smaller problem. Truly, like, I did not think the world needed another footwear company. This was just like, there's plenty of shoes on the market. But for us, we were coming at it with a different lens. And the customer has since sort of pulled us into this bigger market opportunity.
Yeah. Okay, let's move to the next slide.
I mean, it's pretty simple, right? I mean, if you can kind of share the problem you're solving in a simple 2x2 matrix, I mean, I think that's kind of the money slide. I think too often, entrepreneurs try to overcomplicate the problem and overcomplicate the solution, but this is pretty simple. You've got, unattractive pajama slippers, you've got socks, you've got dress shoes, but there was nothing sort of merging the comfort and the style of those shoes together. And that was a huge opportunity for us.
Yeah.
And we've touched on this. I mean, this was the piece that turned it into what I call sort of a lifestyle business to a venture possible or venture results business. And it was that they'd fall into this larger market. And so I think for founders, as you're thinking about your pitch, it's really important to understand your customer. So what is your product market fit? And what is your TAM as a result of that product market fit, right? How big is the market that you're going after? Is it a several $1 trillion footwear market? Or is it, $100 million, $200 million indoor shoe market?
Yeah.
And this was actually by accident, to be honest. I mean, we started like Preeti said, pretty niche, pretty narrow. But where we figured out our customers were wearing us everywhere is we would get complaints from customers early on that the shoes were sort of disintegrating too soon. And so we started asking them, well, how are you wearing your shoes? How are they falling apart so quickly? And they said, well, traveling and out to lunch and out to dinner and to work. And so my response was, well, you're wearing them wrong. These are meant for the home. And we had this amazing college intern at the time, who's actually now full-time with us 3 years later. She interned that summer. And I said, can you survey all of our customers and see if this is a bigger problem? Are people really wearing these everywhere? And I saw this as a problem, not as an opportunity, by the way. And it turns out that she found the data showed that 75% of the customers were wearing us everywhere. And I remember that day where I was so frustrated. How was I going to educate customers to only wear us in the home? And at like 20 years of age, she said, or we can look at the data in a different way, which is how do we meet our customers in a way that they want to wear us? And why not think about adding a thicker outsole so that they can wear us everywhere? And it was like this aha moment. And I remember that day we got on the phone with every partner and we're like, from this moment forward, we're going to test the most stylish and comfortable, versatile flat in the world by offering a thicker outsole. And that was the massive unlock for us that took us from a niche product to a much bigger market opportunity in stylish and versatile footwear.
And again, just to put some more color on this, right around the time we were talking about the race, I think it was actually that week, right? Meghan Markle was wearing Birdies. Birdies launched their Ken Falk collection, which is a collaboration of this amazing, outlandish interior designer that was just flying off the shelves. And then the third thing that happened is that they signed a partnership with Nordstrom to sell Birdies through sort of really the ultimate sort of story or brand you associated with good footwear and good service, right? And so all those three things were happening to this little company with 6 employees at the time, right? That had started off with this niche product, and all of a sudden, all this great stuff was happening and that amazing momentum going into the race. So I think that, we often forget it's sort of like, what is the problem you're solving? Why are you uniquely set up to do this? And then there's the why now. Well, the why now was like Birdies was now folded into the zeitgeist of the modern woman. She no longer wanted to replicate the Sex and the City moment of walking around in stilettos. Hell, I haven't worn them since I don't know when, but that she was looking for a comfortable alternative that fit into her very versatile lifestyle. And that just didn't really exist in a way that looked beautiful and stylish, and yet like was secretly a slipper, right? It was an indoor shoe that hugged your feet. And so I think like the why now piece also matters a lot when you think about your fundraise.
Yeah. I'm curious too, Bianca, like you were talking about, learning that people were wearing out their shoes too quickly and ultimately, or at least initially having that mindset of, what a bummer. Like I'm going to have to tell these people they can't keep wearing my shoes everywhere.
Totally.
I find that at least in my experience with founders, that happens a lot where they have this idea and this idea is the best and that's what they're going to run with. And when they learn something new from customers, they get a little like, wait, they're not doing it the way I wanted them to do it, And so how has that kind of shaped your decisions since that moment, right? When you think about how the company works and how its feedback loops are kind of integrated and how you guys make decisions, was that kind of a big turning point for you in terms of what guides, the next product or the next release or the next collab or what might have you?
Yeah. I mean, I think for us, we have 3 principles that we never waver on. Outside of that, we let our customers be our guide, right? So for us, it's style, it's comfort, it's versatility, and we are mission driven. We are here to lift up and support all women to reach their dreams. Those are areas that we do not waver on, right? There we go, the brand foundation. But we've never said we're only indoor shoes. We've never said we're only closed back shoes. We've never said we can't do other things. And so as long as we're focused on this brand foundation and we listen to our customers, which by the way is one of the greatest benefits of being direct to consumer, is you get to hear directly from the customer their feedback. There's nobody in the middle. They will tell you what's great about your product and where you can change and evolve. And so as long as we don't waver from our brand foundation, truly the sky's the limit. In fact, we launched sneakers earlier this year because our customers were telling us that they were wearing their Starling, our best-selling shoe everywhere, the Velvet Flat. But during the summer months and also months when they're on, wet grass, they wanted something that was more durable. And can we have that same silhouette in a sneaker? Well, when we looked at our brand foundation, we thought, hell yeah, we can. Like it's totally on par with what we're building, what we're doing, and the guardrails that we have. And so for us, we're letting our customers be our guide as long as we stay within the guardrails of our brand foundation.
Yeah. Okay. Do we have more slides?
This
one's fun.
This one is fun. And honestly, to me, this is the money side, right? Why Birdies, why now, product market fit, et cetera, all that's great. But I don't know very many direct-to-consumer businesses that can say this, that they're profitable on their first purchase. It's been our North Star for Birdies from the time we invested to now. And it was actually chuckling to myself as I was reading the Allbirds S1. They recently went public, and they're trading at 10 times trailing 12 months revenue now, right? Another shoe company. And I was chuckling because, the big deal that they made was that they were profitable on their first purchase. And we're like, yeah, and we're too. And then the other big deal they made was, a huge chunk of their sales were coming from repeat purchasers. Women were coming back, in our case, to buy Birdies over and over again. And that's not showed in this chart. We found that out later, by the way, post-investment. But to me, this was, fundamental to understanding the business. The product margins were great. The CAC, again, going back to sort of Bianca's expertise in the area for marketing, was managed. And we were profitable in that first purchase, even if she didn't come back. Our customer didn't come back for more. And then we found out after the investment that she did come back for more, many, many, many times over. And so this was exciting. When we shared it with the partnership, I think everyone was just blown away by, of course, we've redacted the numbers for the purposes of this discussion, but it was really, really impressive to see. And so, especially today, if you are a founder pitching sort of a direct to consumer business, as a VC, my biggest question is, what's your secret sauce on the marketing side? Because if you're going to play the traditional paid marketing game, Facebook, Google, etc., you're going to be in a world of pain because it's just gotten more expensive over time. So now you're going to have to tell me, what's my reason for believing that your business can grow, right? So do you have word of mouth? Do you have referrals? Do you have organic traffic that's just growing in a way that surpasses your paid acquisition and makes for much sort of healthier business fundamentals as you scale up your business?
Yeah. Bianca, do you have anything else to add in terms of what that secret sauce is on the marketing side?
Well, I'll say it really comes down to the people. And that was a slide that you showed before. I mean, we have an incredible team. They believe in our mission. They believe in the problem we're solving, and they are scrappy as hell. I mean, this goes back to me and Marissa investing $50,000 to start a global footwear business. It's not a lot of money. But there's a lot of creativity that we can tap into that does not cost money. In fact, many times our best moments where we have this like Birdies magic stick has come from pure creativity and hustle, none of which could have been driven by any more money behind it. So hire the right people, hire the people that believe in the mission, that want to be scrappy, that are in it for the long haul. And honestly, like for us, that is our secret sauce is passion.
And I mean, I'll add to this, like, just build a great product. Referral marketing and repeat usage doesn't come unless you have an amazing product, right? And so I think that's core to sort of, Birdies, as you sort of look back and come to present day, is it's the product that's really driven our growth, and sort of has lessened the impact or need to spend crazy amounts of money on marketing because we have an amazingly loyal customer base. I think that's one piece. I think the second piece is, I don't know anyone else who hustles like Bianca. I mean, she's literally chased down influencers and pulled out shoes from the trunk of her car and given them away to say, hey, try out this product, because I know you're going to love them. And I love that about her, that she's, it doesn't matter what scale we're operating at now relative to when we invested, but that drive of like, this is too important to us to fail. Like, we're going to make it work and we're going to get creative. I mean, there's several stories, and I won't drop names right now, that, Bianca's had conversations and just really networked well with celebrities, with influencers. And she'll come back from that meeting saying, oh yeah, so-and-so wants to do a joint collaboration with us, or so-and-so. And I'm like, how do you make that happen? Right? Like, this is not an everyday conversation in the day in the life of a founder. I mean, but Bianca makes sure that the time that she's spending networking is very targeted, is very focused on always pushing her business forward. And she's always asking for feedback and help. And I think that's what endears her to a lot of these folks who just want to work with her. I mean, Ken Falk worked with her. He's, like I said, a big time interior designer when there were 6 employees. And that was just sure Bianca's willpower and creativity that brought it to fruition.
I remember we had a consultant around that time working with us, and every night I was sweeping the office after everybody would leave. And she was like, why are you sweeping and taking out the little trash bins at everybody's desk? And I said, who else is going to do it? And if it can save me an extra headcount to bring in somebody every day to clean it, like, I'm the CEO, which means I do it all. Wherever there's an opportunity for me to lean in, there is nothing too big or too small that I would not do to carry our team and our business forward.
Bianca, talk to me a little bit about the networking piece that Preeti just brought up, because I think that there are a lot of founders out there that struggle with being too transactional with their networking and don't focus on actually nurturing an actual relationship, like actually caring what the words are that are coming out of the other side of that conversation. But then you also don't want to spend a bunch of your time being like, how are you? Show me pictures of your kids, because you do have a job to do, right? You have a goal at the end of that conversation. So talk to me a little bit about balancing that, because it sounds like it's something you've really mastered.
Okay. Like I don't go into any situation thinking I'm networking. Like, that's just like first and foremost. Like, I am also obsessed with our product. I mean, I wear it every day. It's on my feet right now. I'm obsessed with our mission of lifting up and helping all women. And so when you're so obsessed with what you're doing every day, it just naturally becomes a topic of conversation. And when you meet somebody who's so passionate about whatever it is they're doing, doesn't that draw you in? Don't you kind of feel like, I don't know, this woman seems kind of crazy. I don't know, this like zipper shoe thing, but I kind of want to help her. I kind of want to be a part of this. And it's like, it's fun. As long as you believe in and love what you're doing beyond building a business, but you wake up every day thinking about how can you make the world a better place with what you're doing every day. Like, I don't know. It's like, I want any platform to sing about what we're doing. Like, come join our journey. It's freaking awesome. It's fun. It's empowering. And like I said, it's not networking. It's just sharing something that I'm really proud of and I love.
Yeah.
You remember, Jordan, I said earlier that Bianca's a force of nature. I mean, this is exactly what I mean, right? She's just out there all the time. And it's not work to her. This is fun.
Yeah. Jealous. Just kidding. I love my job. So I have time for one more question before we jump into the pitch off. And I wanted to talk a little bit about the pandemic because Norwest invested in 2019. You have this big sum of cash and you're ready to go. And then the pandemic hits. And I'd be curious to know how that affected you. Some startups kind of got a boost from it. Some didn't so much. And I'm curious about how Birdies fared in that situation and then how you guys discussed changing or adjusting milestones, goals, kind of how you guys huddled together during that time to figure out what's next.
Yeah. I can start and then I'll hand it off to Bianca. So just for clarification, we invested in December 2018.
Oh, I'm sorry.
The company grew 5x year over year. And I think this is really important data, right? So from 2018 to 2019, the company grew 5x. We had massive plans for growth in 2020 as well, right? And even, I mean, as you can imagine, that trajectory. And then COVID hit and things got real and, our supply chain got impacted and, Bianca can talk more about that. Well, we did a few things. First, we were well capitalized. And again, going back to the fact that we were operating the business so that we were profitable on first purchase, it wasn't like this cash crunch, right? Like, oh my God, what are we going to do? We were focused on two things, actually three things, sorry. One was health of the company. How are the employees doing? For me, it was like, how are Bianca and Marissa doing, right? And we spoke weekly, sometimes daily, over those first few weeks to just make sure we were in sync and we're close to what was happening. So that was number one priority is like, for me, making sure Bianca and Marissa were in a good place. And they were in a great place and they were great leaders through the change. The second was operations. Like, what's going on with our overseas manufacturing? And again, Bianca can share more color there. And what can we do? And the great news leading up to the pandemic for us is that we were already working on diversifying our supply chain. We were already diversifying our, design, sourcing and things like that. But there were some real considerations and it meant that we needed to shift a few things around and think about strategy. So that was operations. And then the third piece was strategy. I remember, in the beginning, everyone thought COVID was going to be a 2-month long thing. And as we were checking in on a weekly basis, I remember we talked about, I was like, how quickly can we get slippers back? How quickly can we pivot back to the home and talk about where we came from and where people are and meet our customer where she is today again, right? And so that was a big, and we were like, double down. Let's just double down on slippers. I remember those conversations, Bianca. And so there was a lot around strategy and planning and coming out of that. So those are the sort of three things from my perspective is like, is the team good? How are we thinking about operations and how, if at all, should we change our strategy? I'll hand it off to Bianca to add more color to that too.
Yeah, I mean, to Preeti's point, this is where, when you're looking to raise capital, think about who you're raising from and the type of partnership you're going to have. Because during COVID, Preeti and I were like this. I mean, we were talking, as she mentioned, daily, weekly. There were so many things to think about. And it was great to have a partner that understood, where we wanted to go, how we wanted to manage the business and help us through. We had some of our greatest days ever in the history of Birdies during COVID. So we definitely were one of those that fared well during the pandemic. I think leaning back to slippers, which is our heritage, certainly helped us a lot. We could not do any creative photo shoots during the time. Everybody was in lockdown, and the team rallied together and started to shoot their own series wearing Birdies in the home. And that surprised and delighted our community on social media. So we rallied together. And I think in many ways, we have become a stronger, tighter team since the pandemic, both from a board perspective, internal company perspective, and also the health of the business has been fantastic. During the pandemic, also it allowed us to think a little bit more about our mission, as we were not dropping so many new silhouettes and styles. And we had an opportunity. Julie Ehrman, who's the president of Angel City, Los Angeles, she was putting together a first of its kind female soccer team in Los Angeles. And this was during the pandemic. And she reached out and said, "You guys are mission driven. I love what you guys are doing. Would you want to be a part of our journey with us?" And Marissa Pritchie and I, thought about it for a hot second. And we said, heck yeah. What does a fashion brand have to do sponsoring a soccer team? But at the same time, it was this idea of like mission driven, one of our key pillars. And so I think that was one of the best things that came out of the pandemic, was that we sort of took this bigger opportunity to take a bigger stance within our company. We changed our logo, we sponsored the team, and just today, actually, Angel City, Los Angeles just launched their team's jersey, and Birdies with our new logo is on the right-hand sleeve of their jersey for the next few years. So really thrilled to be on this journey with them as well.
Very cool. All right, with that, it's time for the pitch off. So here's how it's going to work, folks. 3 companies will have exactly 2 minutes to pitch their products to Priti, Bianca, and myself. We'll give our feedback after each pitch. And with that, let's begin. Our first audience member, first founder, is Jess from Greenlist. Jess, if you could just turn on your microphone and your camera so that we can see you with haste so that I don't have to vamp. Would be ideal. Anyway, so how's the weather? Where are you guys?
Okay, can you see me? Or
can hear you, but can't see you yet. Try that video button, bottom left.
Give me a second.
Okay, I gotta give Jess some credit here. Like, I would be freaking out if I was pitching in this way. Like, just good.
And she only has 2 minutes too. There we go. Hey, Jess.
Hi, Jess.
Hey, how's it going?
Good.
Good. How are you?
Good. I'm sorry about that.
No, you nailed it. Okay, so if you look at the green square on your Zoom, you'll see a timer. It'll pop up. It'll count down 3, 2, 1, and then it'll give you 2 minutes. So you can start when it starts, and then we'll go from there. Have fun.
I'm Jess Owens, founder and CEO of Greenlist. Greenlist enables peer-to-peer returns. Think about that pair of jeans that you ordered in 2 sizes, knowing that you would ship one back. That return most likely is not going back to a store to be resold. It's going to a warehouse, a jobber, or perhaps a landfill overseas. This is expensive for companies, and it is devastating for our planet. Greenlist returns skip the trip back to the store or warehouse, and they are sent directly to another consumer. Peer-to-peer returns. Here's how it works. Shoppers Greenlist items directly from our partner websites by clicking on our Greenlist button. By doing this, they are indicating that they will buy the merchandise as a return. Why? You need those camo flats, but they're sold out, or because you like the incentives from our retail partners. Then another shopper initiates a return through the store's existing returns process. Our technology makes a match, and shopper 1 sends the shoes directly to shopper 2. Peer-to-peer returns. We're targeting forward-thinking shoe and apparel companies on Shopify. The industry is at a tipping point, and we are well positioned to disrupt it. We have 5 retail partners operating on our beta, and I just signed a contract with our first large-scale retail client. I'm also talking to massive companies, including Nike and Athleta, and I'm simultaneously being approached by the furniture industry. As you can imagine, furniture returns are incredibly expensive. We are in development now, and we will launch with our founding partners early next year. I'm raising money to help me deliver an incredible solution to my first customer. I also need introductions to decision makers in the fashion industry. Thank you for your time. I welcome your feedback.
Wow,
Well
Jess, you absolutely crushed it. That was really good.
you.
So congratulations on an excellent pitch, being the first one. Bianca, let's start with you. You seem leaning forward. You're leaning in. Tell us what's up.
Well, I found it interesting. I do have a couple of questions though, just more in terms of like the problem we're solving, because I know at Birdies and a lot of the direct to consumer businesses, 30-day fit guarantees, free shipping and returns, a pretty, nice return policy. I mean, Birdies will pretty much take back anything even after the 30-day. Don't repeat that. Just as we're building our brand. So I'm curious, like, where have you found opportunities where brands are not allowing for returns, at least within the 30 days?
So our technology, we, work with the store's existing returns process. So we are working within those windows. We don't go after the fact. This is not 6 months down the road. This is a return that is something that you can return right now in the process. Does that answer the question?
It also felt like maybe you were, correct me if I'm wrong, Jess, but it felt like you were saying that instead of going back, because there's a universal returns address, right, which tends to be a warehouse, and whether or not that actually gets filtered back into a store or into the distribution center for the next sale is also costly and expensive, and it might not ever make it there. That's what I understood it to be. So it's not necessarily about the policy so much as the supply chain of returns that they're interrupting. Maybe I misunderstood that. But.
Right, no, that's exactly right. I mean, I think I might have misunderstood your question a little bit, Bianca.
Yeah. Bianca, did you have other questions or observations?
No.
Okay. So Jess, I think that I really like the space you're playing in, because returns are a big problem. So what I would have liked to hear is how big a problem is it? And we know for a fact we are way below, we at Birdies are way below the industry standard of 40% returns on footwear. But, both for footwear and apparel. So I would have liked to hear more about sort of like how big is the problem on the return side. The second thing I'd like to understand is sort of unit economics, or how much does it cost from a margin perspective, a retailer to manage those returns, and how much time does it take, and to the extent that it has any impact on inventory availability. Like you said, that particular shoe was sold out and now they're delighting a customer. There's a huge sustainability angle here as well, because you're just reducing carbon footprint effectively of that return, which I think you should highlight as well when you talk about your users. And then as you sort of think about your customers, I'd also like to understand what's your business model, right? Like, how do you make money? Greenlight, how do you make money through the process? Is it on a per package basis, or something else? And then finally, I'd like to hear a little bit more about bigger vision, right? So you're starting with this return, P2P return process, and you're starting with shoe, apparel and footwear, which I really like the focus. Like, what else could you be doing? You'd mentioned furniture briefly, but what other adjacent categories are there, and how big are those categories to go after? And then finally, I'd love to hear more about your competition, right? Who else is doing this? There's a company called Happy Returns, there's Returnly, Narvar, and others in this space. There are also re-commerce companies that are doing this for brands on a white label basis. So I'd love to understand a bit more about who you're competing with. And then finally, more about you. Why will you win? What is your background? What is your team's background? And it's a really cool idea. Why couldn't another competitor just go out and do that? So those are some of the things that I'd want to hear more about. And obviously look at the financial metrics and how you're thinking about the business.
Okay.
Yeah, a lot to squeeze in 2 minutes. Yeah, Jess, I think that considering this context, the only piece of feedback that I really have, I agree with most of what Preeti said. I think that the ask at the end is very Shark Tanky and probably not for this kind of pitch, right? I think that that's normally in an initial pitch, either a 2-minute one or even in a 30-minute session with a VC, the idea is to get them to ask questions. You want them leaning in, you want them to know more, not necessarily hit them with the check, right? And then I will say you did a really good job of saying what you do. You'd be surprised how many founders get up into this 2-minute pitch section. They talk a lot about the problem. They use a couple buzzwords in the middle to describe what they do. And then they start talking about traction, and you're like, wait, but what is it? Right. And I think you have a very concise and clear message on what it is we do. And that's actually harder than it sounds. So congratulations on that and good job on that.
Yeah. I mean, this is where I spend a lot of my time. So I loved it from that perspective.
Thank you. I really appreciate that.
Great job, Jess. Thank you for being with us today. We'll see you on another one.
All right. Thanks.
And with that, we're going to bring up our next guest, our next speaker, Melissa from Pakmi. That's POCMI. And Melissa, I think you've been promoted as a panelist now, so you can just go ahead and turn on your mic and your camera. There we go. Hi.
Thank you for pronouncing it properly on the first go.
What can I say? I'm a natural.
I feel you. Everyone messes up my name all the time. At least they got your company's name right. It's like getting your baby's name wrong.
Am I getting your name right, Preeti?
Preeti, yes, you actually did.
I feel like you're throwing shade at me live in the middle of the episode, so I just wanted to be sure that wasn't what was happening.
Most people don't try. I get Brittany all the time, which doesn't make any sense if you actually took one look at me, but yeah, that's okay.
I mean, we're all trying to be Brittany, but okay. Melissa, you're going to have the timer up here in the green square. It's going to count down 3, 2, 1, and then it's your time to pitch. Good luck. Have fun. Go get them.
Thank you. The world is currently experiencing a major high-skilled labor shortage of over 40 million due to aging populations, the pandemic, and of course, the introduction of new roles. That number is expected to be in excess of 85 million by 2030. If that's left unaddressed, it represents companies losing as much as $8.5 trillion. Simultaneously, 700 million adults want to move to another country annually, yet only 1% to 2% of those people get to do so because of lack of resources to identify opportunity. Hi, I'm Melissa Powell, former high-skilled migrant and repatriated citizen and founder of Pakmi Inc. Pakmi stands for Piece of Cake Migration. We've created a job marketplace and end-to-end services resource on a SaaS platform for companies who have difficulty hiring locally to connect with individuals who want to move to another country, expats who want to move back home, or high-skilled people who have been displaced. Our aim is to renormalize and elevate high-skilled migration in hopes of helping to resolve global labor shortages, refugee reintegration, and promote diversity. LinkedIn is great for connecting people globally. At Pakmi, we're great for connecting people to global opportunity, helping them to find their true place in this world and thriving. Thank you. I look forward to your feedback.
Great job, Melissa. Okay, let's start, Preeti, with you this time.
Sure. So Alyssa, thank you for sharing the story. I guess a few questions for you today is, I'd love to unpack a bit more on the product and understand sort of what your marketplace truly does. Is it a job board? Is it sort of the, Ireland saying, here, we're an amazing place to live, or Miami, the city of Miami saying, hey, we're a tax-free haven for you to live. So I'm just trying to understand sort of who the sponsors are, if you will, on the, demand side of this marketplace. And on the supply side, which is really thinking about these potential folks or employees, are they blue collar, white collar? When we talk about labor shortage so broadly, it's really hard to figure out who you're addressing and who you're targeting. And so I would clarify that point. And then secondly, I'd like to understand, why is your matching better, right? Than a LinkedIn or a job board or the other service. And so I'd love to understand that approach. So really drill down more into the product side of things. And then I thought your opening statement was interesting, talking about the labor shortage, but then you were connecting it to people's desire to move, which could be highly personal. I want to go live in Spain and live on a boat, but that's a highly personal reason. And it may not tie into sort of a job opportunity, right? And so just making sure when you talk about data points that they actually connect down to the core business of the product and the marketplace would be really helpful. And then finally, again, more about yourself. You said you were, a migrant yourself. Like, I think a story like this, when it's grounded with opportunities that you've seen or missed as a result of your own personal journey that led you to start the marketplace, is also helpful to hear.
Yeah.
Thank you.
Bianca.
I mean, I think that's a lot. Those are a lot of great questions. I think we'll give her some time. I also, the other question I have is because we've also tried to recruit people from different parts of the world. How do like visas and that sort of get, like, do you guys help with those visas? Is this a platform for like relocating physical people, or is this just working from home? Talk a little bit about that hurdle.
Okay. Well, can I talk? Do you want me to talk about all of this now, or is just the feedback?
Just go for it.
Okay. Okay. So it is for moving people across borders, and it is, or target are companies who have difficulty hiring people locally, as well as companies who are going after a big, massive innovation growth spurt. Usually those are the companies that are looking for people that have this, the qualities of someone who moves to different countries to work, which are adaptability, creativity, and innovation. In terms of, we're fully focused on moving from point A to point B. And so because of that, we are intending to have an end-to-end solution that goes from matching people who are, who want to move. So that's another answer to your question. If you are on this platform, you are either wanting to move, or you are a company with a job that is about to move someone. So we're not accepting any local only opportunities on this platform. So that's what makes us different from the other platforms. In terms of the visa situation, so we want to match you, we want to move you through the entire process. So we help both parties to figure out the entire process, and everything can be managed on the platform. And then once the move is taking place, we connect them to the resources. And once the move is taking place, we also help them to facilitate a thriving environment. So we follow up with the candidates all the way up to about 18 months to make sure that they're thriving on the outside so that they can thrive on the inside. And of course, we're trying to do this as autonomous as possible. So we're creating the software to enable all of this.
Yeah. I think that, you spent what Preeti and Bianca both said, you spent a lot of time up front with these kind of big data facts around the generalizations, almost like a thesis where you're making a broad statement and getting down to the point. I think you actually would have better benefited by talking a little bit about the visa component of it. We actually have a column on TechCrunch dedicated to hiring, high skilled workers outside of the country, because it's so difficult. So if you've got something sorted out for that, dang it across our heads, right? Because that's a big deal. So that would be like my main piece of feedback. And I agree with Preeti. I'd love to know more about you and kind of what your journey was for the next time you go pitch.
Thank you. Will do. Thank you so much, guys.
Thank you, Melissa. Great pitch. Okay, we have our last founder with us, and I'm going to do my best with it. So I think it's Ghent from Gardenur.
By the way, can we just take a moment and enjoy the fact that we have all women here today, both pitching us and us listening and having the privilege to hear their stories. So thank you for that.
Yeah, it's almost like it's 2021 or something.
Yeah, almost.
It's amazing. Damn time, right? So Ghent, yeah, okay. You can be our lone ranger over here. So Ghent, same thing, right? We're going to have the timer count down. You'll have 2 minutes. Go get them, have fun, and we'll give feedback on the other side.
Sure thing. I'm Gen Durga, CTO of Gardenur, Stanford alumni, self-taught programmer, and part of StartX last year. Gardenur is short for Garden Entrepreneur. They're the first and largest online marketplace for plants, for crazy plant people like myself, who believe that money grows on trees. I grew up in Indonesia. What I call wheat there is actually called houseplants here in the US. So 3 years ago, I started importing plants and selling them at 10 times its cost. It's a no-brainer. So we quickly discovered there's a huge opportunity to disrupt $42.4 billion nursery industry in the US alone. by empowering all of us to grow plants at home with data and technology. We have a negative customer acquisition costs, which enable us to double our GMV each year to a run rate of about $500,000 this year, all thanks to 10,000 of our registered users today who believe in our movement. Plant marketplaces are bound to exist, and here's why: because plants appreciate in value. So unlike other marketplaces, if you buy plants, it'll just grow in value. You buy a new car, the next day it becomes a used car, so it decreases in value. Our sellers have been growing high quality plants at their home and sell them only at half of the retail price. Our buyers, they got free advice from our sellers, and they can become growers and later on become sellers on our platform. So this cycle allows us to grow our user base organically. As a matter of fact, 50% of our sellers were initially buyers on our platform. And we make money by taking 10 to 20% transaction fee. Plant marketplaces is just the beginning for us as we aim to become a global plant network. We are looking for investors who believe in our movement, who believe that money grows on trees. Thank you very much.
Another awesome pitch. Wow. Preeti and Bianca, you guys are.
I thought that was very well articulated. Very succinct. It was like, why does the investor win in this? Why do you win in this? And why does the customer win in this? I think that's really, really important. I also, fun fact, I did not know that plants grow in value. I don't think my plants do, because I tend to kill all of mine.
Mine definitely don't.
We need to buy from gardener, so they increase in value because we give free advice.
You give free advice. So my question is more specifically, it's a marketplace of, are you connecting growers with buyers, or are you helping people like me become a grower and make money to then sell plants to customers that you're helping find for me?
Right. Our current focus right now is our plant hobbies. People who grow plants and they like to buy and sell plants from each other. Right. Of course, there's a newbies market where people just got into plants and they want to buy plants. They're not necessarily exotic or collectibles, but that we are moving in that direction as well. Because we have already the knowledge to grow plants within ourselves.
And one more clarifying point: are these indoor plants, outdoor plants, or both?
Both, but we currently focus on indoor plants because that is what is trendy today. It's been crazy in the past 3 years, and the pandemic hit is even more trendy among the millennials, especially starting last year. Okay,
sorry, one last question, because I am familiar with one other company, the Sill, I believe. Mm-hmm. How is your business different than what's currently on the market? Or like, let's take the Sill, for example.
We get 100 times more plant variety on our platform today. Direct to consumer market, typically they have a limited number of plants that they can sell. We are also different in the sense that we are connecting the buyers with the very people who grows them, who knows how to grow the plant. So if your plant is not doing well, we can always advise you before it's too late.
Thank you.
Mm-hmm.
So again, I don't have a green thumb either, but I'm in the market for a large rubber plant for my living room. I guess. Again, the pitch, as others have said, like it was very clear what to do. The marketplace aspect, I have questions around sort of how you ensure quality, if at all, from the suppliers to the buyers, since you're connecting them directly. So are you vetting the suppliers as you onboard them? So, again, in follow-on conversations, that's something to understand. And my takeaway was that your advantage is both cost and variety. And so I would, again, just make it very clear to say, like, we're better because, we procure it for the plants we sell directly, procure them at a lower cost, but then we have a ton of variety because we have the supplier network directly hooked in as well. And then, I like that money grows on trees sort of cheekiness, but I'm not sure I actually fully understand it, meaning, why should a seller be on the platform? Is this a locally fragmented industry? that I don't know anything about, right? Like, are you basically expanding the forum that these sellers have to a much larger market than they would have gotten otherwise? And then are there the fundamentals as a marketplace that you're offering them? So is it the marketing piece that they're offering the sellers in a larger sort of distribution for their product than they would have gotten on their own? And then on the buyer side, again, I'm unclear how much of it is direct to consumer versus the supplier-led piece. So I would just clarify that. And then finally, for me, again, just going back to the CAC discussion we were having, is you said you have negative CAC, and that sort of, piqued my interest. And so I'd want to dig in more and understand what that actually means.
Sure, let me explain that. So we do plant sale events here in the Bay Area. As a matter of fact, this weekend we'll have one at Stanford Shopping Center, so you can check us out. So where we invite 26 of our sellers to sell together. So they bring their own plants and sell together as a community. And people start lining up in front of our pop-up stores 2 hours before the event starts, actually. And that's how we create hype around our brand, and people actually sign up at the door because they have to be Gardener members to enter. At the same time, we are making money. We're making quite a bit of money, actually. Over 2 days, we generate 80K of revenues.
Wow. I thought you did a great job. And Gent, also, I just got a word from our producers and some of the folks on the back end. This is your 19th episode of TechCrunch Live that you've been to. I'm so glad that you got on to pitch because you did such a great job. I hope that you'll come next week and we can just make it 20.
I will.
Even though you just pitched.
I didn't know that you keep track of the statistics.
Keep track of everything. Data-driven business. But thank you so much for being a loyal watcher, and thank you for pitching. You did an excellent job. I'm also going to say thank you to Bianca and Preeti. You guys are excellent guests today. We learned a lot, so thank you so much for being here.
Thank you so much.
Thank you,
Jen. Good luck.
Good job, Jen. Bye, Preeti.
Oh.
Okay, TechCrunch Live goes down every Wednesday at noon PT, 3 p.m. Eastern. See you next week.